Welcome back in YouTube. Today we're going to talk about two companies that blew up during the pandemic, have almost identical charts, are in completely separate industries, and let me know down below if you think these stocks are value traps or value adds. And leave a comment down below. Let me know if you think these companies are value traps or value adds, and if you've been adding to these positions in your portfolio. Would love to know what you're doing. The two stocks we're going to talk about today are PayPal and Etsy. Now, I'm just going to touch on these two stocks as I think they're becoming pretty interesting. When we think about consumer behavior, Etsy's pretty interesting here because consumers went from goods to services, and if they go back to goods once again, this stock could be tremendously undervalued and have a lot of opportunity ahead. But the one I want to highlight today is going to be PayPal. Now, I believe PayPal is undervalued, but I think it's undervalued for a good reason. PayPal exploded up during the pandemic as the consumer was at home, and fintech was a big subject matter. The whole financial space was supposedly changing, and we put a very, very high multiple on a company like PayPal, and personally, I stayed away from it. We also saw this with a company like Square, and I really correlate today's action with AI to be very similar to what was taking place with the whole fintech movement. With a current PE ratio sitting around 25 and a forward PE ratio sitting right around 12. The PEG ratio is sitting under 1, which usually means that there could be an opportunity here. Now, if you're not familiar with PEG ratio, it's a little bit more in-depth versus a PE ratio. Basically, that's going to be growth versus the PE ratio. And so let me explain what I think is happening here. Number one, I think what's taking place is multiples are compressing on fintech because fintech really didn't impact brick and mortar banks the way we thought they might have 5 or 6 years ago. But now companies like PayPal are in an interesting spot where now they could be losing market share to more payment type companies. But with a new CEO who has acquisitions in the past, let me explain what I think PayPal needs to do in order to reinvigorate that growth side and give a tremendous amount of value to investors. First, let's talk about where PayPal is. See, PayPal has had great top-line revenue growth. Operating income is actually growing with top-line revenue growth, which is something I specifically look for when I look for growth companies. So when we look at their balance sheet, actually a decent balance sheet here. They have over $5.5 billion in cash equivalents, $4.3 billion in short-term investments, and total long-term debt is sitting at $10.5 billion. And this company is still growing at a decent rate here. So right off the bat, I do like the balance sheet. And the one thing I'm noticing is as the company's fundamentals are actually getting stronger, the price is getting more depressed. And this is the problem with buying hype and growth companies, is that the majority of the move is usually early on, and then you normally get the sell-off, and then valuation actually matters at some point in time once the hype wears off. And so we're seeing a repricing in the stock, and at this point in time, we really need to figure out if this is a value trap or a value add to your portfolio. Now, the value trap is definitely going to be that the competition is absolutely heating up, and that PayPal could be losing market share. And so the stock is starting to reprice that in and actually lower its multiple because the company is slowing down on growth and fintech is not impacting the big banks like we thought it would. But if we look at where the company was trading just a few short years ago, take a look at the fundamentals here. This company is now earning over the last 6 months over $1.60 a share versus 14 cents a share when people were willing to pay $60, $70, $80 a share for this company. Now, as most of you know, I do have a $50 to $60 price target on PayPal, and it's definitely getting close to my ideal price, which would be right around $50 a share, currently trading around $59. And with any sort of market pullback here, definitely going to have an opportunity to possibly pick up the shares at my price target. So when we look at PayPal, they were the only player really in the market at a point in time, and they may have deserved the valuation that they got. But now with competition picking up, they need to change what they're doing. I really like the fact that they're buying back stock. That's great to return capital to shareholders. But the opportunity I think that they're missing, and they have to act soon in my personal opinion, before competition really picks up, because they still have a tremendous amount of opportunity and users on their platform. And while they have these users' attention, I think they need to slow down on the buybacks and start looking at acquisitions and really take a flywheel approach business model. So when we think about the flywheel, absolutely, we know PayPal for transactions. And where I think they can add a tremendous amount of value and opportunity for shareholders and possibly untap some growth in their business model. So we all know that we need to go to PayPal for a transaction, but we don't really stay on the platform because there's no real engagement taking place on this platform. Now, I'm just speculating, and obviously this is just my opinion, but personally, as a shareholder, I would be looking for some sort of thing, for some sort of acquisition that can keep people on PayPal's platform much longer. Whether that's some sort of shopping experience, maybe acquiring a company like Etsy, maybe they can acquire something like Robinhood, where there's a tremendous amount of people that use it for their news feeds, they're transacting on the brokerage accounts, and there could be unlocked opportunities when we factor PayPal partnering up with a company like Robinhood. But engagement, in my opinion, is extremely important because if you can engage the consumer and really keep them on your platform longer, there's multiple streams of income you're going to get from this. Obviously, marketers are going to want to market on that platform, so you get a stream of income there. They already have a stabilized stream of income on their PayPal platform already. So for them to take the risk on getting some sort of user engagement, I think would add a tremendous amount of value and unlock a lot of potential and also give them possibly more transactions on their payment platform. And the last thing they need to do is integrate the whole system where they have the attraction of the transactions that can take place, they have engagement, but now everything comes together on an easily used platform that's clean, maybe remarketed, so it's very, very simple to use. And once they get that system in place, I tend to think that this is a tremendous amount of unlocked value that's taking place with PayPal's business. Right now, it's just a payment platform, but what if they can make acquisitions and acquire companies that keep engagement longer, then will add more transactions to their business, keep people on the platform longer, and possibly bring in advertisement revenue into the company. Now, of course, this is just my opinion, not financial advice, but this is the opportunity I see with PayPal. It's basically becoming a boring company that's getting priced in for competition. Multiples are compressing, but this is also a company that does have a pretty good balance sheet, has cash on their balance sheet, and is in a position to make some pretty interesting acquisitions. And that's what I would personally be looking for as a PayPal shareholder. But I'm keeping my price target between that $50 to $60 range. I still think it makes sense, and I still think there's going to be an opportunity to possibly buy this in the low 50s. And I think it's a pretty good risk versus reward at that price point. As always, appreciate your time. Thank you so much for spending it with me. In the next video, I'll probably break down Etsy and get a price target for Etsy. So make sure you hit the bell, like, and subscribe, and we'll see you in the next one. Peace.